Well, welcome everyone to this episode of Chapman Connects, where the discussion today will feature venture capital. And we have one of the most respected members in that industry and in the world of investment banking with us. His name's Jamie Montgomery, and he is the founder of March Capital Partners, but he's also very, very well known for being the brainchild and the host of an annual event that's called the Montgomery Summit. And it's a gathering of the leading CEOs, investors, entrepreneurs from around the world who come together to talk about innovation and entrepreneurship. It's truly a great event. Welcome on the show, Jamie. It's great to have you with us.
Thank you, Jim. My pleasure to join you today.
Well, let me get started, Jamie, by saying yes, you had this illustrious career in investment banking, and you continue to do the Montgomery Summit. But why, at this stage in your career, did you decide to venture out into the world of venture capital with March Capital Partners?
Well, thank you. And partners is an important part of the name. I founded March Capital with several other partners in late 2013. I was just turned 54. I was too young to retire. For 25 years or so at Montgomery & Co., I advised a generation of entrepreneurs in the innovation economy, Silicon Valley and elsewhere, on capital formation, mergers and acquisitions, going public, and built a great network. And I thought it was time to go to the next phase where I would join them as their investor and mentor and coach and help them scale businesses. And so that was my premise, and partnered up with a couple individuals here in Santa Monica, originally Samant Mandel and Jim Armstrong. Samant and I are the managing partners of our flagship fund here, and fourth partner, Gregory Milken, runs our March Gaming Fund. And we've got about $1 billion of assets now. We've had a great run, and the relationships with entrepreneurs and execs have been a critical element of the success.
Could you talk about some of the companies you've invested in?
Oh, we love talking about them. We're like having children and grandchildren. You just love them. Chapman, of course, is in Orange County. We backed a company called CrowdStrike out of Irvine. It was our largest investment in funds 1 and 2. We like to find companies that can scale and become significant companies. CrowdStrike's the leader in cloud-based cybersecurity, and we invested a little over $62 million in it. That holding's worth about $730 million today. So, for us, at our scale, we have single holdings which are bigger than most of the venture funds in Southern California. We like to build big companies, and CrowdStrike was a great success. It came out of Irvine. Headquarters is now in Sunnyvale, but it's still a very distributed workforce. The coronavirus has been a big tailwind to the business because they allow for distributed workforces and teams to work remotely and securely. And again, it's over a $20 billion market cap today, and great company. And they're getting involved in the community with the CrowdStrike Foundation and funding scholarships in the tech world. They have over a couple thousand employees, but that's a great case where you start small and you scale. Now, obviously, not every company turns out like that, but we have a number of companies in the Bay Area, a number in New York. We've been active in India, and our basic premise is to is to find something that we think can really build a large and global business, and to invest, and as they start to mature, really double down and concentrate our bets. And so it's worked out well for us.
Well, that business in Orange County, cybersecurity, cloud computing, doesn't get better than that in terms of timing.
Oh, it's been beautiful.
How important. I lead an audit committee. I'm chair of an audit committee of a Fortune 500 company, and I know how important cybersecurity is. So congrats on that niche. Now, tell me, in your company, would I be correct in in classifying it as a later stage?
Yeah, absolutely. Yeah.
Could you explain what that means to our audience?
Yeah. Well, so the companies will grow over a period of time, and the first funding is often what was referred to as seed capital. That's friends and family. It's high net worth individuals, some seed funds. Seed funds are well known, but there's lots of avenues. People bootstrap companies up with very little capital. And after about a couple years in, where there's product market fit and the team's coming together, they'll often go to raise a Series A. And then, so we look for companies that where there's clear product market fit and at least 5, 10 customers before we get involved. And then the B round will come a little later than the C round. So we invest in A, B, and C. More of our money will go in later, the C round. But if we find a great entrepreneur early on, we'll certainly invest 5 million to 10 million in an A with ability to follow on, maybe 10 to 15 in the B, 25 to 40 in a C. And so kind of early growth, late stage venture. Our focus is on business to business software. We refer to as enterprise software. So we look for large horizontal applications of software. Some people like specific verticals of software, a specific industry, and we've always liked to sell software to larger companies over the cloud. And most of our companies are the next generation software. It's all cloud-based, enabled by artificial intelligence. The AI is really an important element of the technology to take the data and run the algorithms over the data to provide actionable insights. Like for CrowdStrike's case, it looks at billions of events, millions of events per second, billions per day, trillions, per week, and look at everything that's going on in the world and look for traffic patterns and see malware and identify and shut it down and remediate it automatically. You can't have some guy in your basement with a ponytail and your nose ring, fixing cyber attacks. You've got state-sponsored groups, China and North Korea and Iran and Russia, and then you have criminal groups, and you got aspiring bad actors out there. So you really need to have the best tools, and oftentimes it's enabled by AI. So we really look to kind of apply the latest technology into cloud-based software. Look for, and then really what we're trying to do is build larger companies. And so oftentimes we'll see a good company, but it just won't be for us because it's maybe it's a niche market. And those can be good investments for different types of investors. But where we try and look to make at least $100 million out of any investment, we got to make sure we don't run out of market too quickly. We like big markets.
When you mention, it sounds like you really focus on cloud computing.
Yeah.
When I think of Orange County, I think of medical products, pharmaceuticals. Do you do any investments in those areas?
No. I mean, at March Capital, we're very focused on IT, cloud infrastructure, software, fintech software, industrial software, and there's quite a bit of it in Southern California. If you take kind of San Diego to Santa Barbara, it's a big ecosystem, and we're probably the largest tech venture fund in that region. And there's great companies throughout that region. There's plenty of opportunities, and I think there's quite a bit in Orange County that might, may not have the prominence of med tech, but it's still a big important part. And the universities.
It's interesting, Jamie, that you mentioned that you focus, and I can't help but think that's an important part of your success. I had Mike Musalem on the Chapman Connect show, and I asked him about the phenomenal growth market cap of Edwards Life Sciences. And one of the things that he said early on when it spun off from Baxter Labs was the fact that they focused and picked areas where there would be significant innovation, but focused, and that would allow them to focus their capital R&D to be the best in that particular sector of the medical product market. In his case, of course, aortic valves. So so you focus, but I can't help but think that you do a lot of investments and some don't work out well.
Yeah.
Could you share some of those stories? Another thing that Mike mentioned, by the way, was he learns a whole lot more but from his failures than his successes. And what have been some of the things that haven't worked out, and what have you learned from that?
Yeah, well, we look at a lot of companies. I probably see 1,000 opportunities a year and do a couple, so, and you're probably going to have more failures at the early stage, because the later stage, it's about scaling the business. And the question there is, are you overpaying or not? Usually you're going to have an outcome, but is it big enough to justify the valuation? Earlier stages, you have a higher mortality rate. And in a venture business, that's usually at least a quarter. And, I think by my age, you've seen a lot of patterns, and you've been able to recognize what works and what doesn't work. And, and when you're working with some of the younger team members, you just feel like, I've seen this movie before, it didn't end well, and I explain why. But that's one of the great things about working with some of these younger CEOs who are in their 30s, and because they don't know what they don't know, and there's a lot of enthusiasm. So I think typical mistake one can make as an investor is a company can get early market traction and just the market is not as big as you think it is, and then they start trying to scale a sales organization, and it's just the economics just don't work. There's more competition than they realize. And that's probably the largest problem you have in venture. People trying to put 10 pounds of sugar in a 5-pound sack,
And that's true at the later stage as well?
Yeah, later stage, you have to be careful about false positives. The later stage is about executing. And the great thing about CrowdStrike is the efficiency of their sales force. They have an incredible, it's all about execution at that point. And they have an incredible sales force. And, they're using, we went public a year ago, this last week, and afterwards the CEO, who was a longtime Orange County native, kept the plane and visited 100 companies in 100 days, and just the revenue, did incredibly well. And recently, he's gone on a binge of wanted to see 300 companies, and he's had 300 Zoom CEO pitches in 75 days with CEOs all over the world with tremendous success rates, and so it's all about execution. And a lot of people can talk a good game and the technology, but there's a different skill set as you go from that early to that mid to that late. And oftentimes, mistakes we'll make is we'll leave a CEO in place for too long. Not all of them can scale. They might be great at a startup. Now, there's a great company out of San Diego County, one of the great public companies, investments is ServiceNow. And Fred Luddy started that. And Fred never got his college degree. I think maybe you could help him out at Chapman with that, but he's a computer scientist and the high school dropout. And he started this company. He ran it for the first 18 months. And he finally took some outside money. And, they had to bring a CEO in. And the CEO did a great job growing it up to about, $1 billion in revenue. Took it public. That was phase 2. The founder was phase 1. The phase 3 was the CEO that took it from being worth 15, 20 billion to 50 billion. That was John Donahue. And then phase 4 is a fellow who's taken it from 50 billion to close to 100 billion. And, but Fred's been there all along, the founder, but he knew that different skill sets that he needed at different times. And that clarity of self-awareness and what you need on a team. And I went for a walk with him last summer, and we were talking about, going from phase 3 to phase 4 and thinking it through and bouncing like this off for an hour or so. And then 6 weeks later, he'd implemented the whole plan, It's like he was, flying an airplane, changing the engines. I mean, it's incredible. And that's what you need. It's about execution and awareness of having the right people there to execute. So oftentimes you just, keep people wrong people in the seat for too long. You overestimate the size of the market. There's plenty of technology out there. I mean, that's table stakes as good technologists. Capital, there's a lot of capital around it. It's more of a commodity, and so it's prices have been pretty high. I mean, for you listeners who invest, many of the best, most innovative companies are private. So I talk to foundations or, wealthy families and people who are fellow parents of mine at Chapman, and they typically like venture because it's the returns have historically been pretty good. It's very tax efficient because it's long-term capital gains, and it's the most interesting. So they like to engage with their family, and if you're of our age and you have kids, they're probably more likely interested in the tech and what's going on there than in the old economy, and that draws people into it. Then you just got to be careful about throttling the investments at the right amount. But so then it's interesting. These become real businesses, though. There's companies now with this. You think about what's going on in the world in the last few months. We would talk about digital transformation and automation, and we really invested in the future, and the future just got accelerated. Years and years of planning got moved into months, and our companies are just doing great. Okay, we're very fortunate, but it's amazing how fast people can move when they have to, right? People drag their feet for years about innovating or executing, and we're seeing this incredible acceleration. And and people want to become digital end to end, and you can't just digitize part of your business. And it's a very interesting trend. Universities like Chapman have to go digital, and a lot of the legacy systems and organizations are really at a disadvantage to the ones that are able to implement and transform themselves. And speed is important, and execution is important. Yeah. And so when you don't have speed and you don't have execution and you don't have talent, and there's lots of ways you can lose money. We've been very fortunate, Jim, but hope I answered the question.
Yeah, to those young Chapman entrepreneurs, some of whom you helped nurture along, help them in their ideas. You're a supplier of VC money, they're a demander. What attribute would you tell them they should begin to really hone in on? Perhaps the deciding factor for you in deciding whether you're going to commit to a company or not, or to a particular investment.
Yeah, well, sometimes you can create a pretty good business doing something that's quite simple and elegant, and I would say you want to have advanced technology, you want to be really thoughtful about it, but sometimes an elegance in the design of the software can be the innovation itself. There's some pretty unsexy markets out there, like, for example, call center automation. And you just think, it's been done the same way for 25 years. And if you can come along and automate it and make the contact center employees' life more enjoyable, and they're make them more productive, and you can make the customers, clients happier, and you can save money all at the same time. It seems kind of mundane, but sometimes those mundane businesses are ones that are just so good, So I think, being authentic, solving a real problem, and being elegant about it is really important. We probably come in, years 2 to 5 of a company. So we're, if it's a startup, we're probably not the right person, but we're happy to, we always meet with startups and mentor them. I've started a dozen companies along the way and funded, Sky and I funded about a dozen woman entrepreneurs, just because I thought we didn't have enough women in our portfolio here. So we set up a separate vehicle. The first one we funded was out of Chapman. It was from the California Dreaming Business Competition, a Chicago dropout of Booth, who built one of the fastest growing natural foods companies in America. And she just, she just knew her business so well. I was so impressed. And she knew it backwards and forward and up and down. And I said to her, Caitlin, I said, you're making a baking mix to go in a all natural gluten-free baking mix. Why this? We always ask people why they do something. She says, I know it's not very good, but it's my way into the store. And once I get in, I'm going to sell them 20 other products. I just thought I love it, right? And we invested there, and it's been a great success. And sometimes that clarity of thought is so important. Being genuine, being authentic, not trying to be someone you're not. Just be who you are. It's a great world.
I'm probably passionate about the thing you're doing.
Yeah.
Let me ask you this. Your company, March Capital Partners, is headquartered in Santa Monica.
Yeah.
Listen, as part of our Chapman forecast, we have to track VC money.
Yeah.
The latest data, which I think is 2018 data that I have, these are rough numbers. $60 billion is generated in Silicon Valley on a quarterly basis compared to, let's say, seven in LA, which includes Santa Monica. How do you compete with these Santa Monica firms?
Surprised it's that much.
that it's 7. Well, you're a good chunk of it, I guess.
I am.
Yeah.
Jim, when I ran Montgomery and Co., and it was kind of funny, we were an investment bank, and we'd invest out of our own capital and pools of capital. And there were several years there where I was the largest venture investor in Southern California without actually having a fund. So, back in 10, 12 years ago. So I'm familiar with that. Look, we invest globally, and we understand what we do, kind of this early growth investing really well, and we work very closely with our entrepreneurs, and when people accept money from us or we invest in a company, they get the whole firm. It's small, the managing partner and myself and our resources, and we're very committed, and like you, we work incredibly hard to have these successes, like CrowdStrike, and that kind of comes through. People find us a breath of fresh air. We're modest. We have a lot to be modest about. We don't feel like we compete with the Bay Area, because any good company like that, usually you have 5 or 6 investors of note. And in banking, it was always like, if you didn't get the deal, it's like a dog sled. You want to be the front dog, everybody else. It's not a good place to be, right? Whereas as an investor, everyone has a nice seat at the table, and it's not a zero-sum game. And so we bring a fresh perspective. Not being in the Valley, we have a great. We've talked about our summit. We have a great global network. We work hard. We're constructive, and and what we do, that next generation enterprise tech, we're one of a handful of funds that people go to. We have some great companies in New York and Austin and the Bay Area and Southern California. And we started taking companies out of India and enterprise tech and bringing them to America and scaling them like we've done out of Israel in the past. And it's our CEOs that we worked with are really our best reference. People, it's great, right?
Jamie, in the intro, I mentioned the Montgomery Summit. Tell our audience a little bit more about that. What inspired you to do it, and then how do you put it on in this day of COVID-19 and this lockdown?
Well, if you have an answer to that, I'd love to hear it.
So everyone, cards and letters to Jamie. Give him some ideas.
Yeah. Send me sunflowers. Yeah. So back in the late 80s and early 90s, when I was really getting my career ramped up, I'd go to conferences, and there was one that was an old favorite of mine. It was the AEA, American Electronics Association Fall Classic. It was in Monterey at this old Hyatt hotel there. It wasn't anything special about the location. And you'd go up, and you could go hotel room to hotel room and hear private and public companies present. And early on, I met like John Chambers from Cisco. Early 90s, 92, he's still a friend now. We work closely together. And I just thought that personal interaction, and that when they tried to grow it too big and they blew it up, I always thought, and then I look at, the conferences, and I started my career in the Pentagon. I organized one for the Joint Chiefs. I thought, if you can have thematic discussions and then drill it down to the companies, combine the two, So I did my first one in 2004 in Santa Monica, and I thought, how do I get anyone to show up, right? So I had some good companies. So my kids went to school. A friend of mine with the kids was one of the Eagles. So I said, well, if I get the Eagles to play, maybe I'll get some people to show up. So we had a welcoming dinner with the Eagles and the conference the next day. It was a huge success, you know. So I thought, well, what do I got to do next year? So for a couple of years, I'd hire these aging rock bands to kind of draw the crowd out. Jackson Browne, Kenny Loggins, the Beach Boys. But in the meantime, the conference got a life of its own, so we could eventually drop the music out. But we ended up like 3 years in, with close to 1,000 people there. And it became kind of like the Woodstock for tech. So we're getting great companies. And
Great in
for our first year there, we had this little room, and one of the companies was Facebook, the Facebook. And then the next year we had Twitter, and so people were like, who's Jamie going to have this year? The problem was I didn't know who Jamie was going to have because, so we kind of made it up on the fly and started to get a little bit of a cult following. And then, and we had one year we had Oculus there, and they have this room, and put them in the same room we had Facebook years earlier, and people were putting on the headgear. But the problem was a lot of people got sick, so the room was just a mess. But anyway, Oculus got bought for billions, and people invested in that company. So people would come to our conference and just think it was the best thing ever because they'd find companies that they could invest in. And most companies I would pay for the whole thing because we get banking fees out of it. And they say, it's the only conference I go to where I make money, And then when I sold the bank, I got out of banking, people would say, well, they didn't really miss my bankers. They said, I really missed your conference.
And you're not going to get that in a Zoom meeting. You need to
you gotta,
shoulders and talking and that's
so I remember I was down at Chapman one day. It was 2014, and the phone rings, and I was on the Simpson Bowles Commission to fix the debt. I know you probably remember that. And Eric Schmidt was calling to say he'd be happy to come speak, and I was like so thrilled. I jumped up in the air, and I was on campus. I remember because he said, Jamie, I want to help you out. I know you want to do your conference again. And Eric was very gracious about coming down and speaking, and then we brought this little kid from just dropped out of Stanford to start this company called Snap. And we brought him along, so we started the ball going again. And we do it. And this year we did it in March, just before coronavirus hit. We're very fortunate. We didn't have any incidents. And I think, we're going to have to go to a hybrid model for 2021 where we'll, and I think largely do it, but hopefully in 2021, 22, we can get back in person. There's nothing quite like the interaction kind of one-on, person to person, and the energy. And we bring in, we usually have a number of military leaders. You did gracious do a call for me this morning, and General McChrystal was on. He sent me a note, very complimentary about you. He's one of my great heroes in the military. So we usually have a recent four-star in. We try and keep politics out of it. We have a lot of key execs from the Valley and hundreds of venture capitalists, lots of entrepreneurs. We have a big women's program we've done for 5 or 6 years. And so for us, it's about convening people, and then out of that comes a lot of good. And we're excited about it. It's a lot of work, but we have to keep evolving it with the times. It's not easy with COVID.
When I was talking with Mike Vasalam on this show, I mentioned the hybrid models and stay at home and working remotely. And he said, one of the things you have to worry about, though, is in an innovative company, it is people coming together and sharing ideas that just happenstance. And that's the value of the Montgomery Summit.
Yeah, it's so much.
I hope you figure something out. Here's an idea.
We'll figure it out.
Maybe you should have a Burning Man as an image the next time around.
Well, we've done Burning Man. They store all their stuff in.
I should have known.
So here's these people. They store all their stuff in LA. So we brought the things out and we had a little display. And I was talking to the founders, and I guess he lived in New Orleans, and he wanted to fly out. And of course, he's anti-capitalist, but he had to fly first class and wanted a speaking fee. So, yeah, good. That's a big event. They canceled that though this year too. look, I'm a big, you talk about innovation is, that's what's suffering right now. You know, accounting, you know, engineering, the L-directional task can be done remotely, but the interacting and the contact, and that's where, you know, in our firm, we see it. We do a lot of walks now, where with entrepreneurs, we have a large garden at home. We socially distance there. When we do our Zoom meetings with our portfolio companies, we had one 2 weeks ago where we sent them all ice cream from Jenny's Ice Cream. So, you know, nothing technologists love more than ice cream party. So we, you know, we had an hour and a half session, a half-hour ice cream. We did one where we sent everybody a Shake Shack burger. You know, I did one with we did
that was a problem.
Yeah, so I mean, you have to figure out how to have a personal element as well as the Zoom element. The Zoom is tiring, but we try to bring in something. I'm an investor in Bluestone Lane personally, and I have them cater a lot of our Zoom calls in New York. So if I have a call with somebody and I send them avocado toast and their favorite coffee, it shows up 15 minutes before we have a call. They love us before they even get on the phone. They're like, "How can I invest?" You know, you know. I mean, it's simple, right? Yeah.
Well, Jamie, I regret we've run out of time.
Have we? Oh, sorry.
But before we close the show, I just want to express appreciation to you, not only for being on Chapman Connects, but also for all you've helped Chapman in so many ways. But in particular, I know you're the brainchild of the Dream Competition and really our entrepreneurship program in many respects. You not only, I love being around you because you're an idea man, and you know, you just have one idea after the other, but more than that, you go the next step, you follow through, either creating the funding or the other people that will be needed to make something happen. So on behalf of all those entrepreneurs who will be naming future buildings at Chapman University, I want to thank you. And again, thanks for being on the show.
Jim, thank you very much. My honor. My pleasure. Thank you.